I would love to retire before age 65, but I just can't afford the health insurance before Medicare. That could be true, but a lot of times we find that people aren't looking at the entire picture. So the basics here, before age 65, but after being done working, you typically are forced onto the healthcare exchange. The way the healthcare exchange works is everyone gets the same premiums. Above a certain taxable income, you're getting no help with those premiums. Below a certain taxable income, it's completely covered. It's a form of Medicaid. And between those two bookends, you start qualifying for tax credits. So you start reducing some of the cost of those premiums. Where we run into hiccups, so let's throw a couple example numbers up here. So we'll call this 85,000, and we'll call this 50,000 down here. And that varies based on the county that you're living in, so that looks dramatically different depending on where you're living. We'll use those as just examples to give you some taste of things. And they shouldn't be terribly far off for a married couple. And so we'll have a married couple come in and say, oh, 85,000 of taxable income, there's no way we can live on less than that. We're going to have to work until age 65. Well, what you're living on and what you're taxed on can be two different numbers. So for example, this couple, they say, okay, we're used to living on $110,000 of taxable income, and we're still working. Well, and we plan on living on about the same at age 63 and age 64 and age 65 and forward, right? We're not planning on scaling back our lifestyle just to be able to retire a little bit earlier. Why I like to point this out is, what if we intentionally accelerated some of that income? What if we said, we're going to take the income that we need to spend in 63 and 64 and intentionally accelerate that into my last working year, right? I'm going to pay extra taxes this year using something like an IRA distribution, a Roth conversion, in-service withdrawal for my 401k, intentionally showing extra taxes this year so that next year and the following year I can spend from money that's not taxable, that's not showing up on my tax return. The result of that is I pay extra taxes in this year, right? I'm intentionally paying extra taxes this year, and I will pay less taxes and qualify for tax credits in the following years. It doesn't work in everyone's situation, but when it does work, right, it's worth taking a look at the numbers. If we can calculate that and say it's extra $1,000 here and $5,000 worth of credits, that's a pretty good equation. That means the scale's tipping in your favor. Or, I mean, $2,000 of credits and I'm paying $5,000 extra in taxes, not a good trade-off. But if you're not running the calculation, you could be leaving a lot of money on the table, or you could be showing up to work next year and the following year when you didn't have to. That's not a trade-off worth making.